Hey there, welcome to District Talk. I'm your host, Chad McLaughlin with District Home Loans. And this week, we have Corey Paff. Welcome, Corey.
Thank you, Chad.
Goosehead Insurance. Yeah. So, in real estate, there are a lot of folks that help get a buyer to the finish line, right? So you have the realtor, you have the mortgage loan officer, the settlement agent, the title agent, and then, of course, you have the insurance agent. So I thought it would be great to have you on today first, just to kind of get to know a little bit about you and your company. And from there, then just ask some general questions about insurance that I think people maybe either they don't know, like maybe some misconceptions about insurance that we can talk about for folks that are looking into homeowners insurance.
Yeah, absolutely.
Yeah?
Yeah, definitely. It's the big piece of the puzzle and the piece that carries on with the buyer for a long time with their homeowners insurance.
Yeah.
So, yeah, absolutely.
Yeah. And it's kind of like that quiet. It's that one thing you never really ever think. I never think about my homeowners insurance.
Right.
Ever. Like, and I'm sure one day if I ever need it, that's when I'll be like, okay.
Yeah.
But I don't ever think to like shop it around or, it's just there. It's part of my bill and I pay it and I don't ever. It's kind of like car. Well, even car insurance. I think
Correct,
people shop car insurance. Maybe because they pay it on a monthly basis and they see it monthly. Where your homeowners insurance is part of your mortgage payment.
Yeah,
right?
and most of the time you don't see it, and it's you get the one letter a year about your escrow and stuff.
Right.
Yep.
Right. Exactly.
Yeah, I feel the same. Where the person becomes a client of mine, and when they call me, it's normally never good news, So yeah, it's a stressful situation at times, but at least they knew to
not
call
good
me.
news because they have an issue with their house.
Yeah,
that they
exactly.
Need to, make a, okay. All right.
The tree fell into the backyard. Let's just go simple like that.
Okay.
So yeah, the tree fell in the backyard. That's it. Type of thing. So yeah.
All right.
Yep.
Well, okay. Well, before we jump into insurance, I want to know about you and your career. Or how you became an insurance agent?
So that's a loaded question.
Okay.
I was, like most of us, you start one career and you work there for 10, 12, 13 years. And then you're like, I need to do something different. And that's what I did. And I used to, I would go into that job and I did like the job, but I would spend probably 3 hours a day just trying to figure out a way out, and what's my next step, And, I took like many people, right? You take a phone call. You take a LinkedIn, message request that says, hey, like, you want to take a phone call? We have a job opportunity. And I said, yeah, sure. And led down a path to insurance, getting licensed. It was with a different company there and opened and learned a lot from that company. And then really just branched out about 4 years ago with my own franchise with Goosehead Insurance. So
yeah. So you're like a broker, right?
Correct. Yep.
So you own technically, right? Like you're a like you said, your own Goosehead Insurance.
Yep. So Goosehead's a franchise model. Very successful. Founded in Texas. It's fantastic because they help us get the appointments from all the carriers, which is, you can't just get licensed and call up Progressive and say, hey, I want to sell Progressive. Like they want, stability and all of that. So I think I represent about 60 different companies altogether between the multiple states we have in this little, area here. So really fantastic. Love the opportunity with Goosehead. We spent a lot of time in this real estate, market, with realtors and lenders. So I know this industry a lot because I'm in it every single day, I also know that insurance can be the thing that holds up closing too,
For sure.
When something gets changed or we're going to move up a day, and paperwork has got to be updated. So
yes.
Yeah.
So I just had a closing that was delayed because of insurance.
It was not with me though.
It wasn't. No, it was not with you. No, it was with a random. It was random.
Yep.
And the underwriter was questioning the policy and literally called it shady.
Yeah.
So I was
never
like,
good.
shady?
Yeah.
Wow, that's a strong word.
Yeah.
So, and maybe that's something we can talk about another time.
Right.
You know, have you like shady policies or how to watch out for a shady policy?
Yeah, I've seen a few, yeah.
You've seen? Okay, all right. Yeah, because I was just like, we get the policy, we look at it, we look at the premium, we say, okay, this is how much they need, this is how much we need to budget for, and then we kind of move on. We're not looking at, as a loan officer,
right.
I'm not reading the fine print and all that kind of stuff.
I think it's funny where I wish more people would not do insurance on their own. Like, don't just like go online and try to figure it out yourself. Like, have a professional do it. Have a conversation around it. It's not something where you go online, you buy it, and you hope you have it, because there's going to be that day where there's that claim, and you're going to want to make sure you're covered. So have a professional.
That happened to myself with, granted, it was car insurance, auto, and it was through a big company, and we had the very, 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 very basic coverage, and we didn't know any better, and sure enough, we were in an accident, and it was our fault. And here we only had so much that covered. We only had so much that covered us. We're like, oh, okay. We need to really kind of pay attention to what's being covered on.
And
on
in
the
that
insurance
situation,
policy.
what happens is you have to write the check. Which is
right. Exactly. Exactly. And we had to wait. The car was totaled. The other car was totaled, and we had to wait for, I guess, all the parts to be sold because at that point they couldn't sell it, so they had to sell all the parts, and they had to see how much money they were going to make off the parts, and it was a whole to do. So, but anyways, we're not here to talk about auto insurance. We're here to talk about
that's a whole other day.
Right, exactly. But you're a broker. So what does it mean to be a broker? To me, that's kind of like a personal shopper, right? What does it mean to be a broker as an insurance agent?
Yeah, so that's a great question. So I would look at it as, I represent the client, right? Like, say you're coming to me and you say, hey, I want to quote this house. Like, I'm going to take that information about you and that house, and I'm going to put it into my system, and I'm going to start getting quotes back, right? And, between, let's just say, 20 quotes back. Some companies might just say, no, we don't want to do that house because of whatever reason. But you're going to start seeing the premiums. I really don't care who I sell it to, right? Whether it's, Progressive or Safeco or Travelers, or some of the other companies I have. It's what is best for that client, So what's the best coverage? What's the best price?
Right.
We want to make sure we're covered correctly. But at the same time, we don't want to overpay, at the same time. So, like, they have to go together, and at the end of the day, I always tease people, like, when you get your policy, right, like that bundle of paperwork, most of it's electronic anymore, but, like, my name is on multiple of those sheets. So I take pride having my name on all those sheets, It is one of those things where I want that person to know who they have, and know that I'm a phone call away to take care of that. And if they don't like that company, right, or something happens or the price goes up, we just switch you to a different company, type of thing. But you have the relationship with me, Yeah. So that's what it is to be a broker, where some companies you just have one company, and that's it,
Yeah.
So,
So like kind of like what I was referring to earlier, where, you get your insurance policy, and it's not something you ever think about. And here you are 5 years later, and your insurance policy has gone through the roof because every year it just changes up on you, right? Whereas where you come in as a broker, you can.
It's not something like you set it and forget it, right? Like, you probably bought your house like 5, 6, 7 years ago. And what happens with homeowners insurance is two things are happening, right? There's a premium. And then the coverage is also changing as well, because let's be serious, the price to build a house has significantly increased, the last couple of years, And homeowners insurance, the number one factor is how much does it cost to rebuild this home? That's what we're looking at. So with that number rising as well as the premium rising, you kind of have two increases happening at the same time. And that's where we come in because we see the reports. Like we know what carrier, has taken a rate increase or we're seeing a little bit higher. And the second thing is recently there's been some new companies that have come in too. So like, I have a carrier that loves newer builds, so it's like, okay, well, we might have a different option now, the market's always changing and all that. So, I tell people, fall in love with me. That's what I care most about. And then we'll figure out your insurance policy every year. Type of thing. And let's revisit it.
Well, and that's what you really have to have, that relationship and that trust. Factor, which I think you have. You have to be really genuine. I think to have that kind of work ethic. To be able to help folks out. With whether it's shopping for a homeowner's policy, whether it's shopping for a mortgage, whether it's just your realtor, what have you have to have that genuine interest. Yeah,
and I think it's also, I know that you do this a lot too in the process, is like it's an education piece. Like we are professionals, we're licensed, like it's our duty, it's our job to educate our clients, with like, hey, this coverage is out there, I recommend it. Do you want to buy it? Do you want to put it on your policy? If not, that's okay. But this is what's out there.
Like you're not shoving it in their face.
Just like you have multiple loan options, right?
Sure.
This is what's available. This is what makes sense, right? And I think
everybody's situation is different. Everybody's home is going to be different. Which means every insurance policy is going to be different. Every mortgage is going to be different. So.
No, definitely, and there's no two policies the same, right?
Well, talking about policies, what's even like a policy look like? What's a standard insurance policy look like?
Okay, so I think the first thing is what is called a dwelling coverage. Sometimes it's called coverage A, sometimes it's called replacement cost. It's all the same thing. I just call it, dwelling coverage. So every company figures out, they have a tool that will figure out how much it costs to rebuild that home today, right?
Okay.
So we're going to factor in the square footage, how nice the kitchen is, right? How many bathrooms, what's on the floor, what's on the walls, is it paneling or is it paint, right? Because if that house burned down tomorrow, we need to know how much it will cost to rebuild it, right? To buy all the materials, all that stuff. So that's what that dwelling coverage is. I always tell people that is the most important number, right? Because if your house is going to cost $400K to rebuild and your insurance policy is only $200K, what are you going to do? Build half of the house? Where's that other $200K coming from? So I'm not saying double the thing to make sure you have enough insurance. It's trust that number. The other reason why it's the most important is a lot of the other coverages are typically a percentage of that number. So next coverage is normally coverage B, which is detached structures. So your fences that are detached, if you have a detached garage, a shed, a play set, those type of things. So normally that is 10% of coverage A. So if your coverage A is $400,000, you have $40,000. Most insurance policies just automatically give you 10% because if you put a shed up at your house, tomorrow, you're probably not calling the insurance company to say, "Hey, I put up a shed," right?
No.
So there's some trust factor there. Next coverage is your personal property. Right? So a lot of companies, it's 50% of coverage A. Sometimes it's 70, sometimes it's 60. That number can be a little bit more flexible. I always tell people that is everything you're bringing into that house, right? So I normally make a joke about like, are you renting a U-Haul truck or do you have the moving company, coming in and so everything in that U-Haul truck that you're moving in. And then it also, most of the contracts that you see, like you're buying the refrigerator and the stove, the washer and dryer from the seller.
Right.
Well, now that's your personal property as well.
So that's part of that personal property.
Because a lot of people are like, I don't have that much stuff. And it's like, well, you also have these appliances now, too.
Yeah.
So that falls into personal property. The next coverage would be coverage D. Are you following along? A, B, C, D. Yeah. It's real complicated.
Okay.
Loss of use. So that is simply, what if you have a claim, right? So say you have a small fire, right? Let's just go small fire. You can't live there, right? We have to rebuild that kitchen. Obviously, you have kids. You can't have a house without a kitchen, right?
Right.
So now you have to go live somewhere else. Maybe you get an Airbnb for a month or extended stay. That's what's covering that fee, right?
Okay.
Your mortgage is due every month, right?
Yeah.
Your mortgage is going to be, most people don't have enough money for two
So you gotta
different
keep paying the
locations.
mortgage,
Yeah.
right. Yeah,
So
exactly.
that's where loss of use would come in.
Okay.
I'm actually dealing with something right now where a renter in an apartment complex just had a fire and she's out of her place to stay. So loss of use on that renter's policy is covering her to stay in a hotel for right now. So
Wow.
even renters need insurance as well for that type of stuff. Last two that are on every single policy is your liability,
Okay.
which is cover G.
Okay.
Typically, it's 100, 3 or 500K. You can get umbrella policies that go on top of it.
What would be like a liability? What would be something that like because liability that makes me think I did something wrong.
Yeah.
Right?
So
like, what would I do that I could like?
we're gonna go down a gray area.
Okay.
But let's just say your dog bites somebody. And that person
okay.
tries to sue you. Now, we're not going to talk about dogs today, but that could be something
Yeah.
that goes into liability.
Okay.
What if, I know you probably order a lot of stuff off of Amazon and UPS and FedEx. What if one of those guys like slipped on your yard and they try to sue you because something was
Okay.
negligent, right?
Yeah.
So that's going to
Okay.
protect you.
Okay.
I always laugh. There was a funny insurance thing last year. Remember when Johnny Depp and Amanda Heard were suing each other?
Yes.
So when Johnny Depp and Amanda Heard were suing each other, they both had insurance policies that had liability insurance, and the lawyer was being paid for by the insurance company.
Really?
During that whole transaction. Now, I can promise you, like, they did not pay the entire.
That's not
Yeah. But some of it was paid out for the liability.
Interesting.
So I normally do $500K for every policy. Like,
Okay.
the difference between the min and the max is like $1 a month on your mortgage. Like,
Okay.
I'd rather just have the max.
It's like one of those, like, yeah.
Like, who
Yeah.
sues for $100,000 anymore?
Yeah.
I just rather have the max. So. And then last one that's on every single policy is medical payments to others. It's normally like $1,000 or $5,000. I call it good guy coverage, right? So you have kids, I have kids. Like, have you had a birthday party at your house for the kids?
Yeah,
right?
of course. Yeah.
So
Yeah.
same thing for me. Say you have some friends over. Somebody slips and falls, they hurt themselves, right?
Yeah.
And it's not your fault. It was a true accident, but like you have that gut feeling like I just feel horrible. This would help pay for a claim like that,
Okay.
And then, it typically would get them to like the deductible for their medical bills and stuff like that. Their medical insurance, so help them with that. So
Okay.
that is pretty much your foundation of the homeowner's insurance policy. There's extra coverages and stuff like that. And then I would say the last is your deductible.
Right.
Yeah. If you
Yeah.
wanna get
as
into
far as like
deductibles,
determining
yeah.
like how much a
Yep.
policy is going to cost.
Well, no, deductible is more so along the lines of like just like your auto deductible for comp and collision, right? So
Yeah.
typical auto policy is normally $500 deductible. I would say on the homeowner side, anywhere from 1,000 to 5,000.
Okay.
And that number is honestly rising right now with the insurance trends. Honestly, it's different between Maryland and PA, which is another reason why you need to be with a licensed person to explain this stuff. There's no right or wrong answer for deductibles. I always tell people homeowners insurance is for the devastation, right?
Yeah.
So you have that fire, right? Tree falls through your house, right? That's where homeowners insurance comes in, right? The small little toilet overflow that has a little bit of damage, that's the aggravation of being a homeowner, right? You cut the grass and you shoot a rock through the window and break a window. Like, that's a devastation. So your deductible is, what is that, right? So if
Yeah.
you have $1,000 deductible, that means anything under 1,000, you're going to take care of yourself, right?
Yeah.
Everything above, maybe we'll look into open up a claim. So, I don't know. I've been obviously higher the deductible, the lower your policy. So there's also that as well.
Right.
So,
Right.
yeah.
Yeah. And that's probably something like you said, it's going to be more of a personal decision because, 1,000 is a lot of money.
Right.
To a lot of people,
Right.
Where 5,000 is, I mean, don't get me wrong, it's a lot of money too.
Mm-hmm.
But to other folks, it might be like, oh, I can handle $5,000.
Right.
Where, some people just wouldn't. So.
And you also have the people where like, I'm going to take care of it myself. Like my dad's a contractor, right? Like
Yeah.
I have a higher deductible because I will just call my dad to fix whatever needs to be fixed, you know? So yeah, I still call my dad. Yep. So, yep.
Yeah, no, I'm not. I am not at all. I am not any kind of handyman whatsoever. So, oh man. Well, so kind of getting into like the policy, the cost of the insurance. What are some of the factors that affect the cost of insurance?
So I think the first would be like the age of the house. Right.
Okay.
Obviously, if it was built in 1700, probably not. I mean, it's definitely not the same standards of 2024. You know.
Yeah.
So age of the house is definitely number one.
Okay.
Size of the house, so square footage would be number two. Age of roof, would probably be a top three as well. Other factors, I know some insurance companies look at tree overhang. Because obviously. If there's a lot of tree overhang, there's more likely one of those trees coming down,
Yeah.
So tree overhang is one, and then, just the individual themselves, right? So, insurance does pull some credit indicators, with that stuff. So, that also comes into play.
Which is like a soft credit pull.
Yep, absolutely,
right?
Yeah. Okay. Yeah, I get that question a lot, especially during the buying transaction, like, oh, you can't pull my credit. Like, it's a soft pull.
Yeah.
Chad knows this is happening. Like, it's honestly won't even pull up on Chad's report. You're okay. You're okay. So yeah, just don't buy a car.
Don't buy a car. Exactly. Yeah. Yes. Yeah. All right. So, and obviously then like credit history, obviously if someone's credit history is not as great as maybe it should be, there's a likelihood that they're going to pay a little bit more for their homeowner insurance policy.
Correct.
Than what
yeah.
Maybe somebody with better credit would.
Yeah, and especially if like maybe when you're 18, you kind of like didn't pay that auto insurance policy, and you're like, oh yeah, I'll just go somewhere else, and you leave that like $300 bill like that you probably brought up during that conversation. That also is not helping anything either. So
yeah. And you guys would see that on the soft pull.
Yep.
Yeah. Okay. So are you? Are there any like specialized, because I know like one like flood insurance, like we talked earlier about like the potential of a flood, which this area we don't get, but there's other types of floods, right? So what are like some situations that somebody may need like a specialized insurance policy for?
So it's funny. I have a question on my I call it my discovery form when I talk to a client, and it's do you have any concerns about floods? Right?
Okay.
Do you have any concerns about sinkholes? And do you have any concerns about earthquakes? And normally it's no, and it's like, well, good, because they're not covered on a homeowner's insurance policy. Like, you would need a special policy for all three, or some you could put on your homeowner's insurance policy. But earthquake coverage is actually very expensive.
I can imagine.
My dad was working last year one day, and where he was working at, like the house next door, all of a sudden sinkhole came, and they kind of like took down the sidewalk, not the house. And he called me. He's like, do I have sinkhole coverage? I'm like, no. And he's like, can you add that? Like, and I'm like, do you know how much it costs? He goes, no, can you just add it? Type of thing. I'm like, all right, that's fine. But flood is another one. There's I probably get a question about flood insurance every other day, especially from realtors. Like, hey, is this in a flood zone? And lenders, like, how much is this going to cost?
Because that can really affect.
Yes.
Flood insurance can really affect a loan.
Yeah.
For our folks out there listening, because flood insurance is very expensive.
It's one of those where like I have my fingers and toes crossed too when I run the quote, because there's no rhyme or reason for the price, and it's one of those where you find the best price, and the industry has kind of let us go private now more times than not, which is great and has helped it. But the common unknown fact out there is like every home is in a flood zone. That flood zone for like my house that's in the middle of nowhere with no water by it, in the middle of an HOA. That flood zone is X. So I love it when people ask me, is this in a flood zone? It's like, well, technically speaking, it is, right? So my answer is always like, this house is not in a zone that would require flood insurance per your lender, type of thing. So, so that's always out there. I know the tragedy in Houston a couple years ago, like 80% of the houses were in a zone X. So most of them probably did not have, insurance on the flood,
Yeah.
So, none of that was covered. So, that's interesting. But yeah, it's,
and when something's not covered, it's just like, that's just a quick conversation. Is that basically what it comes down to? Like, sorry, like,
it's not a pleasant conversation. Yeah. Thankfully, I haven't had.
I was going to say, have you had this kind of conversation?
No. Thankfully,
before?
I haven't had many of those.
I'd imagine they're very much one-offs. I mean, a flood is a one-off, right? It's a very unique circumstance for, at least for our area that we're in, which is the DMV, Pennsylvania, like that whole area. So flood is not something that typically happens, just like tornadoes, right? We don't see that kind of stuff. Is there such a thing as tornado insurance?
So tornado would actually fall just under wind and hail. So that would be on your homeowner's insurance.
So that would be would be covered.
Yep.
Okay.
Hurricane as well, yeah.
Okay.
Yep.
And hurricanes.
So that's where the deductible comes into play, because we're in Maryland, which is a coastal state, right? So we have coastal cities. So that's where some of these insurance companies might say, hey, we will insure this house, but your wind and hail deductible might be $10,000, right? Because they know there's a high risk of a hurricane coming up to sea and stuff like that. So that's a good point there too. So my thing with flood insurance is always, if you're going to go, we're talking to, possible new homeowners and realtors and all that. Like, if you're going to go look at a house in a flood zone, before you go look at it, get a price for the policy, right? Don't fall in love with the house and then be like, oh, yeah, you know what? We can handle.
But I mean, they probably don't realize it's in a flood zone, right? In my experience, most of the times the flood zone has been like a surprise. Like, surprise.
Yeah.
You're in a flood zone.
I will share a little secret.
Okay. All right.
Realtor.com is more times right on the flood zone. It is actually on Realtor.com.
So it's part of the MLS.
Yep. Now, some people don't put it, but Realtor.com does do a pretty good job on looking at it. Now, the flood map is free. I mean, FEMA has it out there, type of thing. And, the thing about flood insurance, too, is, like, we're only looking at the house, the insurance company. So, like, to run a quote, and I think you've done it with me before, all I need is the address. I don't need any client information. We can see, A, if it's in a flood zone, and then B, how expensive the policy is going to be, because you're right. Like, if that first-time home buyer is going out and looking at a house that's in a flood zone and the flood policy is $5,000, we should probably go look at a different house.
That's going to be a big, it's going to be a big part of your mortgage payment.
Absolutely, yeah.
Yeah, it's going to bump that mortgage payment up a couple $100.
And at least in my experience, that first year flood payment normally is out of pocket too, and then it goes into the loan, right?
Well, yes.
Okay.
Yeah. So they have to. Yeah. So not just the mortgage payment itself, but the upfront cost of it. Yeah, they have to pay for upfront.
Right.
Yeah. Yeah. So you have all these costs, right? That get typically rolled into your mortgage payment. You have the upfront cost, of course, which kind of leads me into, like, we work together quite a bit, just in policies, because we have to make sure that the homeowner can afford the policy, and that's not going to affect what we refer to as your debt to income, right? So you're a huge help when it comes to finding policies that are within a reasonable range, cost.
Or not far off your estimates.
Or not far off of our estimate.
Yeah.
Right. Exactly. So what's it like? I mean, because you obviously, we work together, but you also, you're part of a team, if you will, right? I mean, do you have interactions with realtors, with mortgage loan officers and that kind of stuff?
Yeah. So I would say 90% of my business comes from lenders and realtors.
Okay.
Obviously somebody can find me on Google, but the business model is definitely referral based, which I know your business is also referral based a lot.
Yeah.
And it comes with the trust factor. And, there's that conversation piece, when there's that comfortability of, I know the realtor, I know the lender, and it's like, we're going to get you to the closing table. Like, that is the end goal. I even make a joke half the time. It's a bad joke, but it's the truth. It's like, none of us get paid unless you buy the house. Like,
that's true.
You know, and like, you know, I mean, how many times have you heard of a buyer complaining about, like, you need this paperwork too? And it's like, I'm not asking for it. Like, I'm just trying to get you to the closing table, right? Like, I don't really want this, but somebody else wants this report, you know? And it's like, you know, and we all have the same common goal is to get you into this house. And it's really nice. And then the formality of, you know, the mortgagee information, the loan number, and how the lender wants the paperwork and how your underwriters wants it, like, I have that all saved, right? Like, I know who to send it to. I know how they want it, you know, with the evidence of insurance and the invoice. And, you know, I know that we joked earlier about holding up closing. Like, if you call me and say, hey, we want to close the day early, we need updated paperwork, I know you need that paperwork because you can't get final clear to close until you have it. So it now has to be a top priority type of thing. And we normally flip that. Our goal is to flip it within an hour. You know, 9 times out of 10, it gets done in an hour. So we don't hold up closing. So it is nice. And then, you know, those tricky situations where, you know, I just had a realtor reach out to me in West Virginia, and like middle of nowhere, West Virginia. And it's like, hey, are we gonna have any issues with this house? You know, like if my buyer puts an offer in, like, is there anything that's gonna pop up? You know, and I'm talking like, you know, you do a satellite image and all you see is trees. You know, and you're like, there's a house there, you know, somewhere. So I think it was 16 miles from a fire station. So definitely, you know, there could have been some things that popped up. So I kind of went through the process and just made sure that we could find, you know, adequate coverage for that, you know, client before they made that offer. You know, so you know, let's
and have it be part of, and you know, kind of give them the heads up, like, hey, this is probably going to take what you were initially thinking was going to be a $2,500 payment to like a $2,800 payment, because they're probably going to have like $300 more a month, and you know what I mean?
No,
like,
absolutely, yeah.
So like, so that's I mean, that's a great example, because I mean, you never think to reach out to the insurance agent during. So kudos to that realtor that did that, because I mean, it's not something I would ever think of. You know?
Yeah. Over the last year, the insurance companies are definitely getting way more selective on what they're taking on. You know, you know, it's they're managing risk, right? I think everybody's managing risk right now with you know, everything seems to be a little bit more expensive and all that. So there's a lot of managing risk going on for the insurance companies. So you know, I used to, you know, 3 years ago, you know, when I ran the quote, I would get 25 quotes back. You know, now it's a little bit less, you know, because there's some companies that are just, you know, no, we're okay. We don't want this house, you know, so, which it's their prerogative, you know, type of thing, you know.
Do you, sorry, I didn't mean to cut you off. But do you see that there is, like, with the changes that you've seen, changes like in, what am I trying to say? Like expectations. Like we were talking earlier about a roof that was built in, or a home that was built in 2003, and the roof at this point is, it's no longer warrantable. Right. So what? I mean, are you starting to see changes like that?
Yeah. The roof situation is definitely unique. You know.
Okay.
You know, and it's definitely in some other states it's a lot more critical. I have you ever done a loan in Florida? They have to like have a roof mitigation survey.
We're licensed.
Yeah.
We're licensed to do
first
Florida.
one. He needs his first one, right? But there's like a whole roof like survey that has to get done, and you know what we're starting to see up in this area is you know, we do have some options, right? I want to make sure that's clear, but when a roof is over 20 years old, right? So that's 2004, you know, so the last time it was updated was 2003. You know, there's a lot of insurance companies are saying no on that. And the reason is, right, yes, I know they're 30, 40-year shingles, but on average in this little DMV area, the roof only lasts 22 and a half years, you know, 23 years, you know, so... and we do have our massive thunderstorms and hurricanes that come through this area, you know, or just, you know, large windstorms, you know, type of thing. So that's something that's critical. You know, I do have a a lot of roofers and contacts that, can, a couple of them will just go out and do a free consultation or maybe just charge $100, type of thing to say, no, this is good shape,
Yeah.
And I look at that too is on the realtor side, right? That's something where they can educate their buyers, right? Because if that first time home buyer, or any home buyer buys that house and, they find out in 2 or 3 years they need a brand new roof, like they probably didn't have money saved for that roof, right? And then they have that like little bit negative, negative experience, on like, why did I buy this house, right?
Yeah.
And that's not good. And it's like, just be out upfront with it.
Well, roof shopping is not very fun.
No.
So let's face it.
Yep.
Replacing a roof is not. It's kind of like buying a mattress.
Yep.
It's like it's something you have to do, but it's not very fun. You don't really.
No.
Not something you look forward to.
Yeah. And saving for a roof, like, oh, that's fantastic. Yeah. Like if you're saving for a bathroom remodel or kitchen, like, that's fun. Like,
yes.
The roof, not really much fun, but it's the most important, like, outside of the foundation, like, second most important thing of the house, Protects it all inside,
So one of the things I wanted to bring up before we wrap things up was something that we had talked earlier before we started the podcast, which was that there is a difference between a homeowner's insurance and a home warranty.
Yeah.
Right. So what can you kind of just lay out like what those differences are, like what like an insurance policy may cover that a homeowner's warranty won't, and vice versa?
Right. So it's actually funny because I normally get this call right around now where people are turning on their air conditioners and their HVAC system's not working. Mm-hmm. And I don't know about you, but like that's never cheap. It's always $1,000.
I've had to go through
$2,000, $3,000.
I've had to replace.
Yep.
Yep.
And the question always comes in like, hey, is this covered under insurance? And the answer is 99% of the time, no. That would fall under a home warranty if you bought something. And there is companies out there that do home warranties. Insurance, I normally go back to 2 main words. It's got to be sudden and it's got to be accidental. Right.
Okay.
So a pipe all of a sudden blew apart, like your sink, right? Blew apart, sudden, accidental, type of thing. Obviously, a fire, right? All of a sudden,
sure.
But with, like your HVAC system, like that example, like that wasn't sudden. Like that happened over time, maybe it just got old, wear and tear is normally never covered under insurance, so those type of things. So now I do get the question a lot where water heaters like blow apart, when they're old. So like if that blows apart, the damage caused by that could be covered, right? But they're not going to replace the old water heater.
That's good to know because that actually happened to me.
Right. So
I had a water heater that.
And again, there's going to be refer back to your policy. I think I legally need to say that, right? Refer back to your policy for that stuff. But I always tell people like the damage from it normally would be covered, but not the actual water heater itself.
Okay.
And most of those times it's in the back corner of the house where the damage is less than a deductible, so it doesn't, matter to call in a claim and all that. But, warranty normally takes care of the appliances and the, the utilities of the house, whereas the insurance is there for the devastation, like we said earlier. So, yeah.
Okay. All right.
Yep.
All right. Well, I feel like we delved pretty deep into insurance policies and gotten some good general information from you about insurance. Corey, it's Corey with a K, by the way. Corey, where can our folks find you?
Easiest way is email. I mean, I love email. I mean, you can call me too, but a lot of times I'm podcasting with you and stuff like that. So like I've ignored 3 or 4 phone calls, but I'm really good with email. Corey, Korey .paff, PAFF at QSAD.com. You can easily Google me and find it. I always tell people, text me, call me, Facebook message me, I've somebody reached out to me on WhatsApp, I'm out there. You can find me, so
Okay.
always around, and happy to answer questions. Like that's the, at the end of the day, like we got into this for education part, right? And happy to just help and good things come to people that help. So
yeah, absolutely. I agree with that. So, all right. Well, Corey, we appreciate you coming by the studio today and sitting down with us and talking about insurance. And to all of our folks that are watching out there, of course, we appreciate that. And we'll see you in the next episode.